Okay, and as promised, let's go across to Faye D'Souza. She's waiting by with the Personal Finance Corner. Faye, what's up for discussion today?
Well, Asha, equity has been disappointing over the last 5 years for equity investors.
Sure has.
And, Dhirendra Kumar keeps telling us to put our long-term money in equity. And how do we know the last 5 years in equity repeats themselves? So let's just bring him across and ask him. Dhirendra, thank you so much for joining us. Now, you always ask investors to put their long-term money in equity. Now, we know the last 5 years or so, equity has not really managed to beat inflation. And there's no reason for us not to believe that it won't happen again in the 5 years to come. So why is your view so optimistic?
Last 5 years has been difficult, and of course it has not been able to beat inflation handsomely, but I think it has been reasonably able to match. If you look at regular investments over the last 5 years, in majority of the fund, it has been able to match inflation or maybe a little lower than that, but it is not as disappointing as being made out to be. Yes, 5-year-old one-time lump sum investment may be extremely disappointing, but that's the point. Invest regularly and invest your long-term money into equity. Investing regularly eliminates the option of catching a market peak, and which most investors should do. Yes, equity has been disappointing, but I'm sure that a few years and it will not be as disappointing, as markets are cyclical. The best returns are achieved when you least expect it, and not too many people are expecting great returns from equity right now.
But Dhirendra, then what are your return expectations over the next 5 years, especially from our equity funds? How do we how do we differentiate between what we should expect from maybe large or mid cap or funds like that?
Undoubtedly, the last 5 years may repeat itself, but that's the hope. Equity certainly isn't an inflation-beating fixed deposit. So there is that possibility can't be ruled out. And given that the kind of economic turmoil or economic bad economic framework we have been in, that possibility cannot be ruled out. But yes, over a period of time, equity tends to be the best performing asset class. The reason is that ownership always yields more return than fixed income. Otherwise, fixed income will not be relevant. So I'm hopeful that 1 or 2 years and the returns will not look the same. The problem of equity is that most of the great long-term returns, they are generated in brief period of time, and the brief period of most investors invest after that brief that gain has happened. So it's important for investors to stay invested in equity to derive the best return.
For us to use balanced funds, because then we'll be able to take advantage of the fixed income returns as well, and maybe take a smaller exposure to equity?
Yes, they tend to generate different varying return because they carry varying risk. If you look at balanced fund, the risk is moderated with the fixed income allocation. The large cap stocks, they tend to be little more stable because you don't have the risk of getting into unknown companies, the companies which are not able to weather the economic cyclicality. Mid-cap stocks or small mid-sized companies, they tend to suffer if they're faced with a rough economic weather. So they carry different risks, they carry different volatility. But broadly speaking, I would say that my expectation will be that with any stock you should be able to beat inflation over a long period of time.